And I would say, to your point, this accelerating role of gold within the entire monetary system internationally is becoming very apparent, at least it is to me. So central banks have been net buyers of gold for 14 consecutive months year to date. The National Bank of Poland leads the official purchases with about just under 100 tons. And it's interesting, the guy that runs their bank, his name is Adam Glapinski. And I'm going to do this from memory. It'll be paraphrasing. It's close. They asked him not too long ago, why do you own gold? Why are you buying so much? They've been buying more than anybody. He says something to the extent, think about this from a standpoint of AI, of Bitcoin, of everything that's digitized. And it's weird to hear a central banker say this. He says, we live in a world where a digital world where all of the accounting records are held digitally. And when someone shuts off the power to the global monetary system, we hold gold so that we can rebuild our monetary system free from that interference. Something to that extent, where he more or less said, if someone were to shut off the electronic system, like an EMP or some sort of a hack or whatever it was, with quantum computing, where the new Google Willow chip, by the way, which is a prototype, but if you read about it, Google Willow chip, they made it. It does in 5 minutes what the world's fastest supercomputers do in 10 septillion years. I didn't know what septillion was. It's like 10 to the 25th power. The level of computing in quantum computing is such that anything alphanumeric is in trouble. I mean, JP Morgan spends $1 billion a year as it is on IT and fraud protection. What's going to happen when you get that kind of, anyways? So yes, they've been buying a ton of gold. Bank of China has increased its gold holdings to 28% from 21% last year. So, they've moved up 7% in a year. That's a huge shift, right? And it went on to, this article I was reading said, because gold has appreciated against all major currencies so much, that the effective mark-to-market share of global reserves was at 20 at the beginning of the year. It's now at 30% of central banks. It's the number 2 holding on all central banks. And one last thing I wanted to read you that I thought, it's a paragraph, and then I'll say goodbye or answer any other questions. This was from a man named Paratik, P-R-A-T-I-K, Paratik?
Paratik.
Ganshan. I mean, I can't pronounce his name, but he's part of the IMF. He says, gold has outlasted empires, crises, and currency regimes in an era of digital assets. Its staying power reflects not just geology, but psychology. And I think that to hear an official at the IMF say these kind of things, it's becoming more mainstream. Little by little by little, it's being integrated quietly. And the big money is positioning quietly before any of the other people know about. You all do. I scream about it over and over and over again. Please look at what the big money is doing, not what the so-called experts are saying. And I think gold is becoming also, just like silver, very, very, very important to the global monetary stage. That's all.
All right. So two quick thoughts on that, and then one wrap-up question, and then we'll let you go.
Sure.
There's an old quote from Winston Churchill that I often cite, which is, in times of crisis, the solutions that get implemented are the ones that are already on the table. So when people are freaking out and panicking, they don't say, well, let's just try to think of something new we've never done before. They say, okay, look, is there anything else we can do that we know works, right? And we're not there yet on a global currency stage. But folks are getting increasingly worried, right? They're seeing pretty much every fiat currency getting abused in terms of the expansion of the supply. So there's that. But I think even in big places like Europe, you talked about the guy from Poland, right? I totally understand his point of view there, because Poland is basically saying, like Russia, we got steamrolled by Russia in World War II, and Russia's kind of on the rise again. Like there's now friction between Europe and Russia again, and we're closer to Russia than a lot of the rest of Europe here, right? So they're having to start to think again of like, well, we might need new solutions going forward. So which ones are we going to pick? We're going to pick the ones that we know have worked well in the past. So hopefully, crisis doesn't arrive there. But I can understand why there's sort of a rising appreciation of, hey, you know what? World worked fine on gold for thousands of years, and therefore we probably should maybe have a little more than we've had.
Well, and to that point, which is very well articulated, and couldn't said it, no way I could have said it better. One of the unique characteristics is that for the last since the end of World War II, gold has been held at the Bank of England and the New York Fed. That was, mostly the New York Fed first, and then, well, of course, Bank of England too, because of the roles of COMEX and the LBMA. And that's changing. You have all of these countries that are repatriating their metal from the LBMA and from the COMEX and taking physical possession to remove counterparty risk. And this is even a bigger deal, where it's no longer about a unipolar system. That's what I think is truly happening. And I think that's what Trump wants. I don't think he wants to be the reserve currency anymore. We've talked about that. So it'll be multipolar, where everyone holds their gold within their own borders for the most part. And the Western system that has been trusted, the moral high ground that we've trampled on for a long time now, is being viewed such as, maybe it's not the best place to keep it there anymore. Let's bring it home and stay and get in touch with our own monetary affairs. And that's what is happening. So on top of them all buying it, they're all bringing it home and repatriating it and standing for delivery, because it's very important, I think, in a world where sanctions and threats become real. Gold, makes these countries immune from that by holding it themselves and integrating it into the system, replacing the treasury.
Okay. And last question here on this, not on this, but different topic. You talked about crypto being, essentially crypto security being hacked by quantum or just, super processing chips. Not saying that is going to happen, but let's assume for a moment it does, or let's assume for a moment that the crypto community gets worried enough that it's likely to happen. Would you expect to see large material percentage of the capital that is currently in crypto flee? Probably yes. Would you expect it to flee into precious metals, because that's the next best thing they can think of if their crypto solution no longer feels secure to them?
I would think so. I mean, I think, part of my mission, and I'm not a crypto guy, right? But I speak at the XRP convention. I have Natalie Brunell and Mark Moss. They're on my show. I've been on Mark's show a few times. Big Bitcoin guy, Swan, Bitcoin. I mean, I try to unite the two communities. I think it's stupid for us all to be divisive and dismissive and argumentative. No, I'm right. No, you're right. No, well, we both walk in the door for the same reason. We see
we're pushing for the same goal. Yeah, exactly. Yeah.
One goes this way to make money. One goes this way to save money. Well, it's like a Reese's peanut butter cup. Put them together, and you take that profit. I'll say it this way. I used to go to a casino all the time with a buddy of mine when we would travel as families. He was a big all-American wrestler, and our families would travel together. When the kids went to bed, somehow we always ended up at a casino. And every time we left, he had a giant pocket full of chips. And I'm like, how did you do that? I sat there with you the whole time. You weren't winning like that. He said, well, what you didn't see is every time I won, I took a chip and put it in my pocket, every single hand. And I leave the casino every time with money in my pocket. And that's what we should do. Take your winnings and put it into 5,000-year-old wealth. Don't draw down if you don't want your initial investment, but take the chips off the table in the form of winnings, because you can see what can happen to crypto, where it was 125 and then it's 85, just like that. Well, I mean, that's a big swing. Gold doesn't ever do that. Never has done that. Silver maybe could, but I think the two communities should be together, and I think they should understand that there's a good deal of parallel thinking there. So yes, I do think that would happen, and it's even more concerning what would happen to Wall Street, to your money market account, to your stock portfolio, to your bank account. The ability to be hacked at that level becomes something very concerning. That's when you go back to pen and paper, basically, that we get so far ahead of ourselves that the ability to steal is every bit as good as the ability to safeguard in a digital world. It's frightening to think, and I'm not an expert, so who knows? But it's scary to think that these computers can do in 5 minutes what it takes the fastest supercomputer in the world to do in 10 septillion years, many lifetimes in 5 minutes. So I don't know, crazy.
Crazy. And again, you're not necessarily calling for this, but that's one potential additional tailwind the precious metals could get.
Stuff that rolls through my brain when I'm trying to go to sleep at night.
Yeah. I'm going to pull this up here just as we end. The guy says, "Oof, silver's getting hammered today," and I just had to check. Futures are down 1%, and I love the fact that silver getting hammered is silver futures going from 67 to 66. I mean,
Well, and there's one last thing I'd like to say about that, because part of why that is happening, and it's not working, right? Part of why that is happening is because we have seen a increase in margin requirement in both COMEX and in Shanghai. Basically, what that means is that, and it's not collapsing despite the margin hike, right?
yeah.
So
And they usually do that to try to tamp down the demand, right?
Yes. And so right now the margin, or how much its lease rates right now, are somewhere around 7%, which are way above normal. And that's telling you that the physical silver is very tight. And so what basically happens with those high lease rates, in other words, you have to pay a lot of money to cover your position. That's one way they do it. But another way is through margin requirements. And if you raise the margin higher and higher and higher in your margin account, that means that you have to have more money to buy a contract. Now, I want to equate it this way. I'm in a country club. There's a street on the other side of the road. There's a country club that's where Mark Wahlberg lives, where Alicia Keys lives, Stevie Cohen, the owner of the Mets. I mean, this is one of the nicest neighborhoods in all of Florida over there. And do you think mortgage rates matter in that neighborhood? No, they don't, because none of them have a mortgage. Well, the same thing is true here. What's really interesting is they would normally raise margins to squish the market, but it's not getting squished. Why? Because the small trader that is on leverage using margin, well, they get washed out. Okay, so it falls $1, falls by 1%. But that's a buying opportunity for the guy that just stood for delivery for 59 million ounces the first 4 days.
The deep-pocketed buyers, as you were saying.
The deep pockets say, yo, great, we don't need margin. We'll buy on the cheap. Thank you for selling very much. And maybe that's why you get that stupid AI video out there to freak everyone out, to help this thing of selling. And I don't know, but all I can tell you is that the price normally would get its head knocked off. And the fact that it's only down 1% and then keeps coming back tells me that the rising lease rates are not working, because the big money doesn't need the leverage. They don't need the lease. They will just reach into their pocket and say, thank you very much. And that's what.
Yeah, this is sort of what we were talking about earlier, which is for, a decade plus, right? It was silver would show a little bit of life and then it'd get hammered down because the big deep-pocketed players, the JP Morgans of the world, were net short. They wanted the price to go down because that's where they could make their money. If they're now net long, it kind of should operate the other way, where silver tries to go down and then bang, it gets pushed back up, right?
It just becomes a game only for the very sophisticated and wealthy if you're playing in futures, because again, the margins go up, you have to liquidate your position. That is more or less one of the ways they got the Hunt brothers. Not only did they raise margins much higher, but they also said you can only have a certain amount of long contracts, so they were forcibly made to liquidate the market. They will do all they can to protect the market. It's not working because the people buying, their sovereign wealth funds, their central banks, their auto manufacturers, their Tesla, their Samsung, they're big money people that don't need to go on margin. They just write a check for 50 million, 100 million, whatever it is.